Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 25th, 2024. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area and make sure you're signed up for our email distribution list. So that way you can be notified whenever we post these videos. You'll also see which stocks are giving you overbought and oversold cluster signals within the S&P 500 at the bottom of the emails. In addition to that, we're heavy users of X or Twitter. If you're not doing so already, I would encourage you to follow me at Brandon Van Zee. We really appreciate those of you that click like and repost on these Market Outlook related content. And then last but not least, make sure you're checking us out over on Facebook. We have a group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trading activity. And as you can see with the S&P 500 heat map here today, it was a bullish day. This day felt good. We've had some days recently where that wasn't necessarily the case, but today was an overwhelmingly bullish day for the average stock in the S&P 500. The S&P 500 was only up 0.54%, of course, still going to its own all-time record highs, but that end result is not particularly noteworthy. But the breadth numbers that we see here in terms of stocks up versus down were tremendous. Keep in mind that this market rally likely would have been a bit more aggressive if it wasn't for the absolute landmine that was Tesla here today, and a lot of those health insurance companies, including Humana, United Healthcare, struggled. We also saw that Eli Lilly had a tough down day. Broadcom was down today, Costco was down, and Apple was basically flat. But the point is, those are some of the bigger companies out there as you look at this heat map in front of us. And they really kind of put a little bit more of a wet blanket on the market rally than what should have been the case. This is a very, very bullish day we have in front of us. So let's get into some of the details here. Starting with the Magnificent Seven, as we always do, let's start with Tesla, since I mentioned that already. That stock was down 12% today. Not going so hot there for Elon at the moment. And another thing that's kind of interesting about Tesla is its market cap is starting to slip a bit. Now, it's still very large, don't get me wrong, but as you can see there when I hover my mouse over the Tesla square, it says the market cap is $580 billion. Now, compare that to Broadcom. Broadcom is $575 billion. So those two are nearly identical in size now all of a sudden. Of course, the average person on the street probably couldn't tell you a single thing about Broadcom, even though the vast majority of people are aware of Tesla. Those two are effectively identically valued at the moment. And don't forget that Berkshire Hathaway is actually bigger than both of them with an $824 billion market cap. So while there's a lot of chatter and talk about the Magnificent Seven out there, and once upon a time they probably were the seven largest companies, Tesla is no longer amongst the seven largest companies. So although you'll still refer to it as part of the Magnificent Seven, it's not quite as magnificent as it once was. So they were really the story on the downside here today. You had other areas that were also pretty aggressive on the downside, like the aforementioned health insurance companies. Humana was a terrible performer here today, down 11.7%. That carried on over to United Healthcare, down about 4%, and so on and so forth. So that was another important area that was out of favor here today. But it's really Tesla was the big story on the downside. In terms of the other Magnificent Seven companies, Amazon had a decent day, up 0.5%. Google had a great day. By the way, Google is now at all-time highs as well. Remember, we've been talking about others that have already achieved that. Google was one of those stragglers, wasn't quite there, but today they got over the hump. So all-time highs on Alphabet here with their 2% move today. Meta, a very strong day. They got to their own all-time highs, up 0.63%. Microsoft was up another 0.5% to all-time highs. In fact, it was noteworthy this week because we had something happen in my dividend growth investing class that has never happened before in all of our selections of all of the DGI portfolios that I put together for folks over the last decade. Today, or at least this week, we got our first 10-bagger, which is fun to say. Remember, when you're a dividend growth investor, you're usually dabbling in the already large category of stock out there. And so you don't have the opportunity to have stocks that go up tens of thousands of percent because you got lucky with a penny stock or something like that. But anyway, it was back in early 2015. We bought Microsoft right around $41.33. And if you include the dividend reinvestments along the way, that is now up over 1,000%. So that is our best selection that we've had in my dividend classes over time, and the first time we can say we have an actual 10-bagger. So that is really fun. And of course, we still own Microsoft right now in other class portfolios, like my top-down trend trading class, where it's also a coffee can stock there. So we're very happy with that performance out of Microsoft. NVIDIA also had a good day. Similar to Google and Microsoft, NVIDIA is also a coffee can stock in our top-down trend trading class. For those of you that aren't aware of how we approach that topic, basically we have a trend trading portfolio of 25 stocks. And if that stock that we're trend trading doubles during the time we're trading it, we sell half and then play with the house's money on the rest, and then basically tuck the remaining shares away in what we call our coffee can portion of the portfolio, where you basically put something in the coffee can, dig a hole in the backyard, throw it in there, and hold it forever type of a thing. So Alphabet, Microsoft, and NVIDIA are all coffee can stocks for that portfolio, as we've doubled our money and then some in all of them. And so we have really benefited by this move that we've seen into artificial intelligence here over the past year. But NVIDIA, another solid day, up another 0.5% there. And then that leaves us with Apple, as I mentioned before, pretty much flat. It was down technically just a touch, down 0.17%. Now, beyond the Magnificent Seven, another stock that I thought was quite eye-popping today was IBM. Yeah, don't look now, but IBM is at 10-year highs. If you have bought a share of IBM at any point in the last decade, which we've bought it multiple times in our dividend growth investing class, and held it till today, you are making money. In fact, if you put it on dividend reinvestment plan in all those years where it went sideways, you actually benefited from that, because you're buying cheaper shares 4 times per year to load up your position when it does ultimately skyrocket. And if you look at a chart of IBM, I mean, that sucker is taking off. Today was actually the second best day for IBM. Some of you saw me post that on Twitter here just a moment ago. It was the second best day in the last 5 years, to be clear. The only other day was up more was one of those random bounce days back in March of 2020 during that COVID rally era, where it was up like 11% in a day. But other than that, we do have the biggest up move in IBM today after they reported their earnings. So really excited to see that one as well. Another thing I'm excited about, by the way, is something I just received notification about here this afternoon, late this afternoon. Archer Daniels Midland raised their dividends by 11%. Now, for those of you that haven't been following the news all that closely this week, be aware that Archer Daniels Midland put their CFO on administrative leave and has to comply with the SEC request for some additional documentation. In other words, there could be some accounting scandal that's brewing there. And so I really thought that Archer Daniels Midland would hold off on reporting a dividend increase, because I knew it was typically this week during the calendar year where they would announce that as a dividend aristocrat with nearly 50 years in a row of increases. They typically do it this particular week. So we just had a long conversation about that in my question and answer session class today. It was a 3.5-hour session, and a big chunk of that was dedicated to talking through what's going on with Archer Daniels right now. And I really didn't think that they would kind of thumb their nose at the SEC and come out with a dividend increase. And I surely didn't think that if they chose to go that route, they would raise it by double-digit percentages. So that kind of knocked my socks off. Really was not anticipating that, but here we are. So we'll see where we go from here. But very impressive dividend increase announcement from a company that's been, caught in a scandal here this week and has really seen its share price tumble as a result. Other big movers, Caterpillar had a nice day, up 3.5%. They are at all-time highs here now as well. That was largely in response to United Rentals, which uses a lot of Caterpillar equipment. It was actually the top performing stock in the S&P 500 today, up basically 13%. So a huge day for United Rentals, and Caterpillar enjoyed the ride as a result as well. ResMed had a very nice day in the healthcare space, up about 8%. Comcast had a nice day as well, up 3.3%. They just announced their dividend increase here earlier this morning as well, and that was about 7%. Had a lot of increase announcements on my Twitter feed here today if you're interested in that sort of thing. Netflix is another stock that we own currently in my top-down trend trading class. That sucker just keeps on surging even after its big move after earnings. It was up 3% again here today, so we're loving that one. And then if you look down below in some of these smaller sectors, we had excellent performance across the board. I mean, you had good performers within the staples, you had good performers within the utilities, good performers within the real estate, and it looks like a clean sweep out of the oil and gas stocks within the S&P 500 at least. Remember, a lot of those areas have been kind of left for dead or just not really participating in the rally, but today just felt a little different. Everybody was, jubilant is the way it kind of felt here. So a really, really solid day for most market participants here today. Let's get some specific breadth numbers now. And as you can see, when I pull up the Market Watch tab, there we go. We had 403 of the 500 up today. So over 80% of the stocks in the S&P 500 closed in the green today. That's a very impressive showing, especially considering we were only up 0.5%, right? It's not like we haven't had 80% up days before, but they usually are associated with, let's say an S&P 500 that's up like 1.5%. This, if you look at it, just kind of looks like a meh type of a move, only 0.5%. But then you look under the hood and you're like, holy cow, everything was moving to the upside today, but it was really just Tesla that kind of kept a lid on the overall end result there. So really excellent breadth here today. So we did end up with a new closing all-time high on the S&P 500. Note that it's not an intraday high. Yesterday on an intraday basis we were a little bit higher, but today from a closing price basis it's an all-time closing high. Naturally, we still have a strongly bullish posture. No surprise there. We've had one for basically the entirety of the last 3 months, right? People want to fight it. People want to disagree with it. People don't want to believe that the stock market could possibly be this strong. Yet here we are, right? And it's been in our face every step along the way. It's been consistently strong. It hasn't been like a fluke, right? So, hopefully those of you that follow this system of using the market forecast posture setting mechanism, you've been benefited by this move here more recently. You'll notice that the Dow Jones was up nicely today as well. In fact, outperformed the S&P 500, probably because of IBM and Caterpillar. It was up 0.64% today. It, I think, got really close to its own new high from a closing price basis. Yes, it did. This candle here last week was a little higher on an intraday basis, but on a closing price basis, this is a new record high for the Dow Jones as well, above 38,000. Of course, it keeps its strongly bullish posture as well. In fact, the Dow did not even have the 1 or 2 days of weekly bearish posture briefly the way that the S&P 500 did there for just a couple of days. The Dow has been pure green the entire time since November 2nd. That's a pretty amazing and consistent performance right there. Now onto the bottom two. You can see that the NASDAQ had a decent day, but again, with Tesla doing a little bit more poorly, it just wasn't quite as exciting for it today. But it did still manage to close higher by 0.18%, and that was also a new high there for it, at least more recently, on a closing price basis. And then last but not least, the Russell 2000 was up about 0.8% today. You can see that we're basically riding the 30-day moving average higher there. We do still have a bullish posture, so we have bullish postures across the board, but the Russell 2000 has been a little bit more hit and miss because you've had some exaggerated moves up and down, so it just hasn't been quite as consistent as something like the Dow that has just been just a workhorse to the upside with very little give back. Right now, the Russell 2000 is trying to prove its worth, but you wouldn't really call it a leader at this moment in time quite yet. Nonetheless, a very strong day across the board. Hopefully it treated your portfolio as well. I know we enjoyed it here at Market Scholars. All right, that's my 15 minutes. I appreciate you guys checking this out. Remember, if you want to get me back on track with hour-long videos, I'd urge you to click like for me there on Twitter. As long as we're up in over 100 likes, I'd be more than happy to do that. On the other hand, if you like these quick hitter 15-minute videos, just continue to do whatever you've been doing up until this point. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.